All right. It is 6:31. It is September 20th. It is Fed Day. Whoa. I actually personally don't like Fed days. All the misdirection, all the guessing, all the positioning. But sometimes there's a lot of good opportunity if you have levels mapped out and you have certain if this, then that type of scenarios in your head. My name is Scott Rudler. I'm the Chief Strategic Officer of T3Live.com. Welcome to the 630 Club, where we try and figure out what the narrative is for the day, where we can make some money, how we can work on our process, and figure out how to stack them and rack them and pack them so you can get paid for September or the third quarter, however you maneuver it. Let's see if this is kind of working. I hope it is. I do see myself live. Unfortunately, it's not letting me have comments come in, so I can't interact with my dogs around the world and say good morning. So I'll just say good morning to all of you. Hopefully you're feeling good and you're getting ready to, make some money, or not, or at least just sit and be patient. It's been a very patience man's game lately. It feels like a lot of names aren't acting special, but there are places to navigate the ranges. When they look bad, you got to buy them. When they look good, you got to sell them. Not the best environment for actual momentum traders that like continuity and follow through and multi-week moves. But every now and then you go through phases like this, and then it changes. So it's your job to be on top of it when it does. So right now, if you look at the SPYs, here's your high from July 27th. This is your low from August 18th. Okay, a decent corrective phase, bounce one, lower high. This is where we bottomed yesterday. Write this down, 439.94. It's your point of reference. If you're really, really, really bearish, in order for the market to correct, you're gonna have to get below and stay below 439.94, and then these are your points of reference. At this point, the SPYs this morning, if you did take home a little bit of things, just because yesterday's action was pretty good, right? You were able to buy things in the hole. Granted, they did it midday after Instacart came out. Bottom line is, you could have made some money. It wasn't the easiest. As soon as Instacart came out, everyone focused over there, and then they kind of ran. Some of the names were acting better in the morning, like a Tesla, an Apple, a Meta, even a Netflix finally bounced. Whoa. But again, that's cash flow trading. If you're not caught, you can test levels below. That's our job, right? To be prepared with those levels so you don't start too early and get involved in no man's land. So anyway, so at this point, if you're long from yesterday, from this bottom tail, I would trim some, and then just know later today, probably not till after the Fed, here's the moving averages, right? This is 445-ish, and then this is 447. These are your two real pivot resistances, and then here's your active support, and usually you get some kind of movement to, so something's going to lead the tape and give you some clues on what's happening when you get all those false moves with the Fed. At this point, the narrative is higher for longer, which finally the street's accepting. That's why the Fed funds rate is coming down a little bit for 2024. And then, some people think he's going to have he's going to obviously sound like hawkish, like his job's not done, oil's too high, food prices are still too elevated. They could raise more if they want to, but chances are things are easing somewhat. And then you have some growth concerns out there now, a little bit more than you've had. So it could be a little bit mixed. So we'll see what the outcome is. So bottom line is have your levels, and then if you look here at the weekly chart I showed you guys yesterday, it's like it's pretty amazing where we are, right? This is your weekly chart. Here is a taper tantrum where you had a 20% decline. That's when I put the blood on the street account to work and made good money here during the pandemic. This was one of the best time ever for traders, believe it or not. Most of us made 4 times our average, put the blood on the street account to work. And then from here, everyone said we're going back to test the lows, and then we had a trend above the 821 day all the way to here. So PS, this was your downward move from 2021. And here was your inverted head and shoulders pattern that cleared this downtrend. And right now we're kind of in a wedge-ish type formation. And we're not too far from the all-time highs. A lot of people are so upset and so enamored with the action, but PS, we're like, oh, look where we were. We were here last year. That's true. in order to consolidate a move like this, you got to go sideways for a little while. So anyway, it's kind of hard to tell where we're going to be year end. I'm still in the camp a little bit that we're going to have a fourth quarter move. I don't think it's going to be a tremendous move. I don't think we're going to make new highs on the year. But I do think that there'll be good things to do. It would have been better to come from a lower area so you could have a more of a continuity type of move, but we'll see. Right here, if you look, this is 440. You can't get too bearish if you hold 440. If for some reason we break 440, then all of a sudden this is that 440, 431, 433 area. That would be the low from July. So we'll see how it goes. If we hang in here and they keep throwing things at the market and it's hanging around, chances are, you do get a little, little ease in rates, so the dollar comes down and, we have a decent earnings coming up. Then we take this out, and then here's 459 and here's 479. But for now, things are kind of getting tight. And they get tight and then they expand. So just don't get all your undies in a bunch. Anyway, so let's go back here. Let's go to the Qs. Qs are important. Qs also put a bit of a bottom tail in. We'll see how it goes come 2 o'clock and 2:30. You have 366.81. Came back and reclaimed 369. This is your resistance zone, like 372 to 374. So we'll see what happens there. The SMHs pulled back a bunch, looking a little faulty. Like all these things are below the moving averages. I like to be in 10, 15 positions when the SPYs and the Qs are above the 8 and 21 day, when stocks are making higher highs, when there's leadership and FOMO. We haven't had any of that since the second quarter of this year. We've been in a corrective phase since, so you just have to pull back a little bit. What do we know here? Well, I guess this is your 2-day support in the SMHs. So that is what? This is 144-ish. Actually, what's this low here today? 145. So let's put 145 as key active support. It did hold yesterday, but didn't really give you much of a move. We had some inside days, which means just digestive type indecisive action. If this wanted to rally, this was from the other day, by the way. Here is key resistance. If the bears want to keep control, they don't let this get back above, 140. What is this? 148.50-ish. So we'll see how it goes, and act accordingly. But again, the only way you can really navigate is if you know how to do it and you know what you're looking at. So this is like a void where if it wanted to push through, and you were going to short this because you think it goes lower, I would wait till you get to a spot that's a little bit more compelling. And if you were playing a bounce, because it was a 157 to 145, just know, kind of what the roadmap is. If you look here in NVIDIA, which always gives clues for the semis, just an inside day yesterday. Not really. It was just 2 days ago was a lot easier than yesterday. 2 days ago, if you came in on Monday short because NVIDIA broke the 50-day and broke below 451, you got paid Monday morning. And then if you came in flat because you didn't like the action there, and bought versus a level, you were able to make some decent money. Yesterday was a little trickier. So this is key resistance, all these moving averages. So at this point, NVIDIA is not acting special like it was above all the moving averages, or even here. It's more in a corrective consolidation phase. And then we had the new issues this week. Thank God for the art of the first day. Okay, a lot of guys in my community made really good money long arms, so did I. And then we only played it for a day and a half, and then it failed. Maybe these investment bankers should stop keeping these things private for a decade, and by the time they let them come public, they're already decelerating their revenues and they're trading at a PE of 100 plus. Anyway, so that was one way, and then CART was totally different. CART failed within the first 10 minutes of the art of the first day, and some guys actually made decent money short. I just avoided it because there was no interest to be long. So you could either do half the battle or the whole battle, which is making money there. So anyway, you look at ARM just to learn, a little tutorial, so to speak. You go to the 15-minute, which is the one that I marked up. Here is the first day of ARM, right here. It was awesome. Okay, traded above 58 in the first 5 minutes, got above the 5-minute high, went to 62, $4 fast. You can make thousands of dollars that way. Then it consolidated for the afternoon, gave you a move above 62 even from the last half hour. We don't see those kind of moves anymore. We used to get them all the time, and it went to 66. So there was two trades, two really good trades, and then we all took it home, sold it the next day up 4, day and a half trade, bam, nice little piece of business for the active traders. But then it was just too highly rich for anyone to support it. Couldn't hold 66. One reason to get out. Tried to hold 62 first kiss and then just rolled over. And now chances are, this thing's going to be testing 51, the IPO price, which makes nobody happy. So, yesterday I was like, guys, let's look at CART. I think CART opened up at 42, went to 42.90, went down to 41, and then tried to hold for 5 minutes, and then broke 41 and then trended lower the rest of the day. Horrible action, just in general. Like, look at that. It's just good action if you're short, but if you bought either one of those, after, you didn't do so well. So I just tried to give you a little play-by-play here. Here was your 42.90. Here was your opening price. Tried to hold 41 literally for, 3-4 minutes and couldn't. Some guys got short there. I didn't pay for the borrow. I just was like, you know what? It's not worth our time. Trended down all the way. So you're probably going to be, I would think this week you're going to hear about ARM testing the IPO price of 51, CART testing the IPO of 30, and we'll see how it navigates there. Otherwise, it's going to be noisy, and no one's in a rush to be getting in IPOs that are overvalued and overstuffed by the piggies of private equity. But anyway, let's move on. What can we look at today? That usually Apple and Tesla are good things to look at during Fed Day for some clues. Apple is had its little bounce. Showed some relative strength the past 2 days, held 176. Maybe there's a trade to fill this gap. So that's something. But again, this isn't really acting special. It's not trending like it was trending. All of a sudden we're broke here. It's just trying to bounce and figure out what's next here. Tesla also is not special. It did give you a little bit of a red dog reversal right where it had to. We drew this trend line. Remember when it gapped up on the Morgan Stanley upgrade right there, gave us some decent action and then failed to 271. Little red dog reversal here. If the market wanted to rally, that has a little bit of room to 271, and then ultimately it might need to, be in a bit of a channel. And all these things don't look great. They're all choppy. It's just not a great trading. Even, Microsoft broke this ascending channel to the downside. Gave you a little bit of action, versus support, and then but where could it go? There's so much resistance above now. So unless it really breaks through it and goes nuts, which I don't expect it to do, which we'll see. This is now 331-ish. Just got to know where they can go and what you're looking to get out of it. Financials aren't great. Energy kind of just rolled over a little bit at the top of the channel, kind of like what the small caps did a little while ago. Basically we were talking about, will sellers come out at the top of this 2-year channel? And not saying it's done, but it's better to be selling into resistance, which is the way it's been, versus looking for a momentum breakout. So now it's already below the 8-day. So watch this 89, 88, 90 area. It's pretty big. When we watched the IWM pause, you didn't know it was going to roll over. Remember, I'm like, okay, we have the 3-year range. Our target was 198 to 200, and then it hit 198. This was 199. This was 202. Rounded over, and now all of a sudden, we're trying to figure out if the small caps are going to lead this market lower. Which you have this little head and shoulders top pattern halfway in the middle of this lethargic channel trading. Yeah, it is what it is. It happens. Here is now your new point of reference. This is 181.07. 181.07. So PS, watch this for today, and we'll see what goes on. Here's your resistance now. I wish I was more optimistic, or but this, again, there's just things to do. There's no special momentum fast trading. It's just okay, got to be really selective here. This is a fake out there. This looks like it's going to break down, so you got to buy it. This looks like we should be adding to it, so you got to sell it. And that's what happens in a range until a range resolves. And usually a range does resolve post a binary event, and today is probably one of the biggest ones. I'd watch the TLTs. The TLTs usually don't lie. If you were to see, remember over the summer, I'm like 99-ish is big, and the TLTs broke below it, and rates rose and puts pressure on the equities this summer. Well, here's the lower end of the range. Whenever you break a threshold, like this is 92.82, here's 92.23. The computers don't like it. Right now, the TLTs are up a little bit. Okay, so 93.15, so not quite in the danger zone, but if the TLTs were to break 92.82 and then 92.23, because that would basically tell you that the bigger money thinks that the Fed is hawkish, and rates are going higher versus dovish, then I'm sure we would sell down a little bit. So these are two key pivots. If all of a sudden the TLTs are going to have a rip-roaring rally to the upside, that would be the street interpreting Powell as a bit more dovish, done, etc., and then that might help equities. So they're just things and clues and signals. And on Fed Day, they try and trick you as much as possible. So try not to get tricked too much. Just play the extremes, know your levels, don't look for no man's land. Some are asking me about gold. I think if you want to be in gold, the best thing to do here is take out like a really big call spread. You do have a big accumulation here, big accumulation. It's been in a downtrend pretty much since May, or consolidating, whatever you want to call this. It hasn't pulled in that much. Maybe go out and buy yourself a big November call spread, maybe 185s by 190s, or if you want to really be closer, 181 by 184s, or maybe a lot of spread. If you think it's going to get above 191 or 193, it could happen. Like you look here on the weekly chart of the GLD. I haven't done this in a little while. Yeah, I think last time. It's a little noisy. Let's see the monthly. Yeah, this is the last time I drew it. So people are talking about this massive, cup and handle pattern, which it's still in there. It's got to digest, right? This was a big move going sideways. Sometimes it takes longer than people want to wait for, but ultimately, it's still hanging in here. And it seems like big accumulation pattern. And if the market wants gold to make a huge move in the fourth quarter or first quarter of next year, it's got to get above this spot. And if you're trying to time it in here, it hasn't been the easiest thing to do. But at some point, if it continues to hang here and goes, you probably want some exposure. Most people like the boomers, people my age or a little bit older, probably have 10% of their net worth in gold, which it's a good asset to have. Most people probably 40 or below have 10% of their net worth maybe in Bitcoin as their hedge against whatever you think that's going to be a hedge against. It always changes. But either which way, everyone picks and chooses their vehicles. I have 7 different accounts, but I'm not going to get into that now because it's already coming close to 650. I have to put together 40 charts for the alpha team, get myself in the right frame of mind so I could execute with confidence, get prepared, and that's what I feel like everybody's got to do. The state of mind is important. You got to be in the right state of mind to execute on multiple thought process when one clicks. If you're not thinking straight, you're not going to see straight. If you're not going to see straight, you're not going to execute. And if you execute poorly, you're going to lose money and get frustrated, and that's not a great recipe. So take a deep breath, listen to some music, get prepared. It's only 6:50 in the morning. It opens 9:30. Make sure your morning process is something you like and do every day. One more time, a little vision on the SPYs. Here is your upper range. Those are your levels to write down. Typically at 2 o'clock when things start to get a little haywire, you just don't even want to play extremes. Here's your point of reference for the week. That's yesterday's low. This is a zone that if the market wants to rally, 445 would be one spot that would be tricky where the moving averages are. Here's a spot above. And look to see in the morning what's leading what. Is Apple trying to stay balanced? Is semis being okay? Do we have any leadership? As of right now, things are a little bit of a lethargic mess, but that could change just like that. Thanks for tuning in. I appreciate you. I'm having my tech guy come in later this week or early next week once my open house is done, getting a new computer. He's going to check out why I can't talk to you guys on Twitter anymore. I'm also going to start being a little bit more on TikTok and Instagram because I feel like those social media platforms are doing better while it feels like X is a little bit on the decline. So I'm going to do a little bit of everything. Either which way, the moral of the story is I'm trying to add value so you guys can navigate these waters and be happy, right? Don't worry, be happy. Remember that song? I'll see you guys a little bit later.